in the race of quantum computing, which is hailed as the next generation computing revolution. RGTI is undoubtedly one of the most watched players. Over the past year, the stock has experienced an astonishing 1,700% increase, and then witnessed a sharp pullback after the release of its financial reports, staging an intense collision between technological ideals and market realities. This article will comprehensively analyze the investment value and potential risks of this superconducting quantum computing company from four dimensions: technological progress, financial status, valuation logic, and competitive landscape, with a particular focus on the deep connection between its performance and financial health. Let's start with the technological breakthroughs. In the second quarter of 2025, RGTI launched the CFUS 136Q system, marking a crucial step for the company in the field of quantum computing. This system, which is composed of 4 9-qubit chips spliced together, has achieved a 2-qubit gate fidelity of 99.5%, reducing the error rate by half compared to the previous Anka-3 system. The breakthrough of this indicator is of great significance. In quantum computing, fidelity directly measures the accuracy of calculation results, and a 99.5 level means that the system already has the basic ability to execute complex quantum algorithms. What's even more noteworthy is its chip splicing technological route. Unlike competitors such as IBM and IonQ, which bet on large single chips, RGTI chooses to combine small 9-qubit chips into larger systems through precise connection technologies. This modular approach cleverly avoids the defect risks in the manufacturing of large quantum chips while achieving linear performance expansion. Company CEO Kulkarni emphasized at the earnings conference that this architecture has laid a replicable and very viable foundation for building 1,000+ qubit systems in the future. According to the technology roadmap, RGTI plans to launch a 100+ qubit system by the end of 2025 while maintaining a 99.5 fidelity. If this goal can be achieved, it will put the company in an advantageous position in the race for quantum supremacy. Quantum supremacy refers to the ability of a quantum computer to solve problems that classical computers cannot complete within a reasonable time. Currently, the industry generally believes that more than 1,000 qubits and a fidelity of over 99.9% are required to achieve this milestone. RGTI's management expects the company to reach this goal within 4 years, with gate speed below 50 nanoseconds and effective error correction techniques being the other two core indicators. Behind the technological advantages lies continuous R&D investment. RGTI independently manufactures quantum chips at its Fab 1 factory in Fremont, California, and owns more than 200 patents, forming a full-stack capability from chip design to system integration. The gate operation speed of its superconducting qubits reaches the nanosecond level, which is more than 1,000 times faster than the I don't trap technology, giving it a significant advantage in hybrid quantum classical computing. Faster operation speed means less idle time and higher system efficiency. In terms of finance, RGTI's financial performance shows a distinct polarization feature. In the second quarter of 2025, the company's revenue was only $1.8 million, a year-on-year decrease of 41.9%. Looking at a longer period, in the first quarter of fiscal year 2025, the revenue plummeted by 52% year-on-year to $1.47 million, marking 5 consecutive quarters of year-on-year revenue decline. This downward trend deeply reflects the difficult process of quantum computing commercialization. Meanwhile, the company's revenue heavily relies on government contracts and research grants. Institutions such as the U.S. Air Force Research Laboratory, DARPA and NASA contribute the vast majority of its revenue. Such revenue is not only highly volatile but also has the problem of low gross profit margin. For example, in the first quarter of 2025, the company's gross profit margin was only 30%, a significant drop from 49% in the same period of 2024. Main lie due to taking on more low-margin basic research projects. The delay in the authorization of the National Quantum Initiative (NQI) Act has further magnified this volatility. The act was originally planned to provide $2.5 billion in funding over 5 years, but due to congressional wrangling, it has not been implemented yet, directly leading to the suspension of relevant project appropriations. In contrast to the weak revenue, there is abundant cash reserves. Through the $350 million ATM equity issue ANS completed in June 2025, the company's total cash and short-term investments reached $571.6 million, and it has no debt at all. Calculated based on the current monthly cash consumption rate of approximately $2.8 million, the operating expenses in the first quarter of 2025 were $22.1 million, which is approximately $88.4 million on an annualized basis. This fund is sufficient to support the company's operations for at least 6.5 years. This combination of high cash and low revenue is not only a reflection of the heavy asset and long cycle characteristics of the quantum computing industry but also reflects investors' bets on its technological route. In the context of such financial performance, the efficiency of capital use has become a key point of divergence. Judging from the financial report data, RGTI has invested more than 70% of its cash in improving chip manufacturing processes, cost-reducing quarter and system expansion, Successor and DOF 100 plus qubit systems. The R&D expense ratio in 2025 was as high as 1,100%. R&D expenditure. At the same time, it has optimized the cost structure through strategic cooperation. The cooperation with Quanta Computer has reduced the R&D and manufacturing costs of non-quantum components by about 30%. By connecting to Microsoft Azure and Amazon Braket cloud platforms, it has shared the hardware maintenance costs in the quantum as a service model. Although these measures are difficult to improve profitability in the short term, they have laid the foundation for long-term commercialization. However, in terms of valuation, RGTI's current valuation level is undoubtedly at the extreme end of the market. Its enterprise value sales revenue multiple is as high as 571 times, far higher than the median of 3.26 times in the technology industry, and even far exceeds that of its peers IDONQ 1 to 7 times and D-Wave S19 to times. This valuation means that the market has already overdrawn the growth expectations for many years to come. If the price-to-sales ratio is to be reduced to 30 times, which is still a premium level for high-tech companies, based on the projected revenue of $6 million in 2025, the company needs to achieve an average annual revenue growth of 19 times in the next few years, which is rare in the history of global business. According to the most optimistic scenario projection, assuming that RGTI occupies 5% of the global quantum computing market by 2030, corresponding to a revenue of approximately $750 million, and calculated at a 30 times price-to-sales ratio, the company's valuation would be approximately $22.5 billion. This figure still has room for growth compared to the current market value, but the time cycle that needs to be crossed is as long as 5 to 10 years, and during this period, it needs to complete 3 transitions: the transformation from scientific research equipment to commercial products, the expansion from government clients to enterprise clients, and the upgrade from customized projects to standardized products. Each stage has multiple uncertainties in terms of technology, market, and competition. The comparison with peers' valuations further highlights the overvaluation of RGTI. Although INQ has far more cash reserves than RGTI and a more mature technological route, its price-to-sales ratio is only 127 times. D-Wave, as a pioneer in the field of quantum annealing, has a price-to-sales ratio of 192 times. RGTI's 571 times implies that the market has given it a premium for its exclusive technological route advantage, but in fact, giants such as IBM and Google have already entered the superconducting quantum computing field, and the competitive barriers are far from being formed. Historical experience shows that the high valuations in the early stage of a technological revolution often burst when the expectation fulfillment fails. For RGTI, possible triggers may include the failure to release the 100-plus qubit system as scheduled by the end of 2025, or the failure to meet the fidelity standard, the continuous shrinkage of government contracts due to the delay of the NQI Act, the launch of quantum systems with better performance by giants like IBM. The financial report data shows that the pullback of the stock price after the release of the Q2 financial report has already reflected some of these concerns, and the institutional investor position ratio has dropped from a peak of 35% to 28%. In terms of specific investment strategies, for existing investors, a step-by-step reduction strategy can be adopted. They can reduce 30–50% of their positions at the current high level to lock in profits, and keep the remaining positions to wait for the verification of technological milestones. For potential investors, it is recommended to wait for the valuation to return below 200 times the price-to-sales ratio, corresponding to stock 5, before gradually building positions, while setting a strict stop-loss, such as a drop below 2. Quantum computing, as a disruptive technology, has long-term value that cannot be ignored, but only those companies that can transform their technological advantages into commercial profits can ultimately bring sustainable returns to investors. That's all for this video. See you next time.